Welcome back to the channel, everyone. Today we are diving into some crucial updates that have been making waves in the market. I thought it prudent to share my views with the community. We'll start this video by breaking down the recent Hindenburg allegations against SEBI and what it means for traders. And then also we'll move on to analyze the latest technicals for Nifty and BankNifty, helping you stay ahead in these volatile markets. And stick around till the end because I've got an exclusive offer for you, a flat 30% discount on Go Charting on all annual plans. So your go-to platform for advanced trading tools is 30% off. The offer is running for the next 10 days till about 20th August. So let's quickly get started and understand what this means for all of us. Okay. So if you closely read the Hindenburg report here, okay, which I'm showing you on the screen. Hopefully everyone can see it. So actually what has happened, I've read this entire allegation, so to speak. The report, the recent post by Hindenburg Research, this one makes severe allegations against SEBI chairperson Madhavi, claiming she and her husband had stakes in offshore entities connected to the Adani money siphoning scandal that happened. Okay. According to these guys, it was a scandal, but obviously our Supreme Court has given a clean sheet, as you all of you know. But these claims have sparked widespread debate now. So it's crucial to assess the evidence provided and determine whether these allegations hold up under scrutiny. So one point that I would immediately focus on in this report is the lack of direct evidence. The primary issue with these allegations is the absence of direct evidence linking Madhavi or her husband to any illegal activities. The blog post relies heavily on documents and whistleblower accounts, but these sources are not independently verified as of yet. Without corroborative evidence from neutral parties or third parties, these claims are highly speculative and unsubstantiated, in my opinion. There is also contextual ambiguity in the claims that I've made. The blog post presents complex financial structures and offshore entities as evidence, but it does not definitely show that these connections were used for illegal purposes. Offshore accounts and investments are not new. They are a part of the global financial system. They serve their purpose. While they are often scrutinized, they are not illegal per se. The leap from ownership or association to wrongdoing is significant and requires more substantial proof than what is currently submitted in this report or provided to us. Okay. There is also absence of bribery allegations. Interestingly, the post does not accuse the SEBI chairperson of accepting bribes, which would be a more direct form of corruption. Okay. Instead, it focuses on potential conflicts of interest, which, while serious, which is true, if true, they are serious, but they do not automatically imply illegal activities or behavior. Okay. This weakens, in my opinion, this weakens the overall argument as it shifts from hard allegations to concerns over ethics, which are much more subjective and really not a bigger part of concern for the stock market. Yes, we might have some certain knee-jerk reactions to it, but in the long run, the growth story is intact. Obviously, another point to consider is about SEBI's regulatory actions. So, SEBI's regulatory actions under Madhavi's leadership. The blog post does not convincingly explain how our alleged connections to the Adani group might have influenced SEBI's decisions. Okay. SEBI operates within a framework of rules and checks, and any significant deviation from these norms would likely have drawn attention from multiple oversight bodies. So, in conclusion, while the Hindenburg research blog post raises very important questions about transparency and potential conflicts of interest, the evidence presented is insufficient to substantiate any claims made against the SEBI chairperson. And without concrete proof of wrongdoing, these allegations remain speculative and unproven as of now. Therefore, it is essential to approach these claims with a little bit of caution and demand further investigation before drawing any kind of conclusions. Okay. My confidence in these allegations is, I would give it a score of 3 out of 10. This low confidence score reflects the speculative nature of the claims, the reliance on unverified sources, and the absence of direct evidence of illegal activities. Um, in itself is in itself is a testament to this unfolding story. Okay. Now, obviously, as someone who is a rational investor in the market, my duty is to critically analyze these allegations and assess the credibility of the evidence presented, which I find it highly speculative. Once again, I'll tell you that, and it actually ridiculous in my opinion. Okay. Uh, Basically, there is no lack of independent verification and no direct link to misconduct, which are my main points in this. So, I would definitely proceed into the markets on Monday with caution, but I would not go in with a short bias at all. In fact, I would rather be thinking about, looking for specific short trapping opportunities wherever shorts get trapped. And if our technicals signal a long setup or something, I would rather take that than short the market directly. Obviously, if the market gives me the opportunity to short, I will short the market. But let me tell you, what could happen in the market is that we might have a knee-jerk reaction, initial reaction. The markets might fall sharply, not Nifty as much, I would say. Bank Nifty technically is in a downtrend right now in technical terms, so it might get further affected by this speculative um, negative news in the market. But if what we've seen in the past 24 months, if we go via history here, every dip is being bought by investors. So we might, jitna fast niche jayega, the faster it goes down, it might bounce back even much faster and go to new highs. So my outlook is fairly bullish. Yes, we are in a little bit of a downtrend, but Friday's session has given us new hopes of this current bull run to continue. Okay, and then now we'll get into the technicals of actually what I mean. Okay, so in Nifty, if you look closely, there is, and I'll share these levels, these links to these charts in the description channel. Do check it out. Okay, if you look closely on Nifty, this is where the market created value. Okay, this value area on Friday was created, this orange one. Okay, now we will treat this zone as a no trading zone. Okay, since I'm sorry, this, just give me a second. This is not the, this is the Nifty chart. My bad. Okay. If you look closely at the white value area, this is where Nifty created value. Okay, this was the range in which Nifty operated throughout Friday. Interestingly, what is happening right when the markets are turning a little bit positive, the first signs of positive markets were seen on Friday. This news comes over the weekend. Okay, so watch how the chronology samjhiye aap. Okay, understand what's happening in the market. What is happening in the market is we've created a lot of value on the top, then we had a sharp downfall, a good correction, a slightly healthy correction, not that really great given the size of the markets we have now. Okay, and then we created a sideways zone here. Interestingly, we've broken out of this composite value area in Nifty and we've created a value area at the top. So if you look closely, let me just show you some profiles. These were the profiles that have been created. One profile is here of Tuesday, then another of Thursday here. Tuesday and Wednesday is actually a composite profile. So I have merged them together, but if you look closely, they overlap each other. Therefore, I have merged them together to form a composite profile. What you will see in this is that Nifty created some kind of value here. It went down, tried to create value on Thursday here, and then eventually we had a good gap up, and we held our gap up and we created value at the top. Okay, so interestingly, we have created value above Tuesday, Wednesday, and Thursday's value area, and also Monday's value area. If you look closely here, so last week's and all 4 days of value area have been broken, and we've created a new value area above these 4 value areas. What it actually means is we have value has been accepted above. Okay, so interestingly, Nifty will probably go into an uptrend if it breaks 24,415, which is this level. So simply speaking, let's assume that, okay, let's assume this is a no trading zone for us. Okay, if the markets are operating within this range, do not trade. It's a small range. hardly 70 points. You don't want to get caught up in chop from both the sides, because actually the mega trend is obviously bullish. The semi, the but we are also in a certain kind of a downtrend in a higher time frame as well. Not a very large time frame, but you would say, like, on one day, yes, we are falling down, and on a very shorter time frame, like a weekly time frame, in terms of daily time frame, last week what has happened, we've shown some signs of recovery. So uh, in a larger sense, we are still in a bull run. We've had our dip, and we are showing what first signs of recovering back and continuing our India's growth story and the bullish price action uh, since Friday. Okay, since Friday. So it's just one day. Let's not give it that much importance. For now, these are the levels. Okay, what I am personally expecting is, if we break 24,420 or 24,418 to be exact, and start accepting above, we'll have a massive recovery, and 150-point recovery, and really good, we'll get a really good move about this, to be honest. Now, cause of concern is this single print which has been created here. You can call it area of a good supply zone. Okay, so interestingly, we'll have to see, for any kind of a continuation of longs on Nifty, we will have to break 24,550. Okay, then we have another huge up move from here till 24,650, and anything beyond 24,650, this is the high resistance level. Okay, anything beyond this is, I would say, a high probability setup. The uptrend will be intact. The longer time frame uptrend which we are in since the past year or 2 years, that will regain its strength in a way. So we need to break 24,665 in the long run for this uptrend to continue. Otherwise, we will keep consolidating below this level, or we might even go into a downtrend, a larger downtrend, which is yet to come. I believe it will come, but not right now, in my opinion, unless, of course, uh, the market really runs with this Hindenburg news, and also takes the shorts take opportunity of this and pile on, then we may have a different story. But for now, this is my outlook. Okay, then let's talk about some shorts. Okay, anything below this no trading zone, basically this will be our no trading zone, right? Simply short below this, but I would be a little cautious. Okay, since there are some really good consolidation areas here. We've created a good base after falling, and we are slowly trying to break out of that base. Okay, and trying to recapture the ranges which are above. Okay, market moves from balance areas to balance areas. Okay, so if I have to take shorts, I would wait for 24,328. Okay, there is a good chance that shorts can get trapped above this. So let's say if markets move below here, I will not short immediately. I will look for some short trapping opportunities, and if market reverses from here, goes back into this range and pulls back, then definitely I'll take a long trade. Otherwise, this will be my no trading zone if there are no shorts trapped below. Usually when the market is turning a little bit bullish, there are a lot of look below and fail setups that happen. Anyways, anything below 24,330, yes, there is a cause for concern, and we will have a good short opportunity here of at least 50 points. So let's treat it as a scalp to take 20 points from the market. Low size, good scalp opportunity here. Anything below 24,275 is definitely a bearish market, and we'll have a huge down move till 24,152. Okay, not huge in terms of the recent ATR of Nifty, but decent enough to give us an odd 70-80 points, even 100 points here. Okay, this will be my outlook for this week in terms of Nifty. Now let's move on to Bank Nifty. Now, what does Bank Nifty, what are we looking at Bank Nifty? There is a very high resistance. This is the most I would say the biggest resistance currently in the market is 5680. Anything beyond that is definitely highly bullish for banks in India. Okay, and I would definitely take this long. I would wait for price to break 50,715 and consolidate, sustain above this for some time, at least like 2 30-minute candles or 15-minute candles. So about 30 to 45 minutes is price should accept in this area. Once it starts accepting above this area, definitely there is a 200-point move above, and then beyond that there is a huge move of 400 points. Okay, these are the two longs I'm looking at in the market. These are really great, juicy, chunky moves that I would like to capture if we break 50,715 or 720 oddly. Okay, the first signs would be when you break 5680, which is the value area high of Friday's trading session. Okay, anything below this, and I really believe Nifty is pretty intact in terms of bullishness, but Bank Nifty might, and interestingly, Bank Nifty is still slightly bearish on my technicals. But when I say slightly, why? Because if you look closely, this is the composite value area in terms of market profile. These are from Monday to Thursday, right? This is the composite value area, a value area of the entire first 4 days of the last week, which is from Monday, Tuesday, Wednesday, Thursday. Okay, and if we break Friday's value area low, which is at 5540, then there is this juicy 150 points below. I will trade these shorts cautiously with less size. Okay, there's a good chance we go below. We get oddly 70, 80, 100, even 100 points, and then we may even bounce from here. Okay, as soon as we start bouncing, I would target 50,675 from 50,364, which gives us like 300 point move. Okay, which is good enough in my opinion. You can book some at 5500 and the next at 5600 or 584, leaving some runners till 5700 or 650 for that matter. Okay, so this is the outlook that I am looking at. The other thing is, we take a small short scalp and close our positions. If we start breaking into this composite area and price starts sustaining below 50,364, okay, so let's say 50,000 oddly 350 ke niche, below that, if market starts sustaining, then definitely it's a cause for concern, and then we can even see 50,000 in a matter of a day, because now Nifty is moving really fast and in bigger ranges. So covering 300 points on that day would be very easy. So this is my short. These are my short setups. These are my long setups. Okay, all of these levels are shared in the description channel. Just click on the link in the description channel, open the Go Charting application, and you'll get all of these links over there. Now let's move on to the best part of this video. The final part of this video is that Go Charting is running a Freedom 2024 offer, which is in celebration of India's Independence Day, which we are approaching on 15th August, right, in 4 days time. And if you convert, let's say you are on a monthly plan or even a yearly plan, and you choose to top up with another yearly plan. So even if you are currently a subscriber, you can top up and take benefit of this offer. Let's say you are on an annual monthly plan and convert to an annual plan, you will save flat 30% off on all data plans. Second, if you are on a yearly plan and then you still choose to top up with another yearly plan, then this new 12 months will be added to your currently remaining amount of time that you have on your subscription. Let's say you are on a yearly plan, you have 3 months remaining, and in 3 months your plan is expiring. Then if you choose to top up, you will get 30% off, and you'll get 3 months, which 1 year on top of the 3 months that you already have. Okay, so go on the pricing page. You don't need any code, nothing. Just check out with your preferred plan, MCX, NSE, or NSE plus MCX. Or if you want to choose the crypto or forex plan or the USA plan for tracking any commodities like crude oil or anything else on the US exchange, then definitely just click on buy now. Make sure once you click on buy now, and let's say you want to upgrade plan, just make sure to choose annual from here. As soon as you choose annual, this 30% off labels will come in. You can choose your preferred. Let's say you choose India All Premium, and then you proceed to checkout. What will happen is you'll see something like this discount applied 30% off, right? You don't need to do anything. The discount will be automatically applied. You just have to check out with a subscription, or you want to do a one-time payment and you can apply. Of course, if you want to pay with UPI, click on this link and watch this video on how to actually pay with UPI. This video will explain essentially how to pay via UPI from our another website called procharting.in. That is only for payment purposes. Just use the same logins that you are using on GoCharting, pay on ProCharting using UPI, and then come back to GoCharting and log in, and you will be upgraded to premium. Okay. Thank you so much and have a great week ahead. Of course, remember one thing: the next few weeks will be a war on your psychology. Okay. What, in my opinion, people are doing is to generate liquidity. They're creating panic in the economy so that more and more liquidity is attracted to the market. So people can either exit their positions or accumulate really good stocks. Okay. So if you're a long-term investor, this news shouldn't affect you. Of course, I would say that stay away from stocks with high volatile news attached to it, right? Adani being, personally, I don't have an opinion on Adani stocks, but there are many opportunities in the market. It's just not Adani, right? So proceed with caution. If you're a long-term investor, just ignore all of this drama that is happening currently in the economy, and protect your psychology from these outside attacks. Okay, this is a war on your psychology. Okay, understand that. Do not fear, do not panic. Yes, if the substances, if the claims that are made in the Hindenburg report, if they are substantiated with logic and proof, then and then definitely it is a cause for concern, but not for the broader markets. India's growth story is intact. India's next few cycles are very important, definitely, in my opinion. And this will just be a small dip in the overall uptrend in our markets. Thank you so much. Have a great day. And do leave feedback in comments. What videos would you like to see from me in the future? Thank you so much.